everybody? Today we got the 10-year chart, monthly candles for the Forex pair USD CAD. It's been a while I haven't looked at that, so we'll see what is up with that. Alright, let's start by drawing my support lines, maybe some support here eventually. Oh, right now some important support here being tested on monthly candle, and I have some resistance up here that's been proven, and a little bit more resistance here. So we have these wider levels, and after that we have these shorter term patterns where we have some support and resistance and some sideways action. Another sideways move. I like this horizontal support and or resistance. I give more value if that breaks down than slanted lines. I know in classical charting principles there's a lot of rising wedges, ascending triangles, descending triangles, channels. It's all right if you break out of it, but the move I prefer is a breakout out of one of those patterns which has a slant to it, but also coincide that with a break of a launching pattern which has a horizontal trend lines. Let me draw my arrows. Wait, hold on. Arrow here. So we could have here, if we have a close under 124.39, 120, a monthly candle close. So that we're going to have to wait about 13 more days for that. We could have a merit move here, and if you read the chart a little bit differently, you could have a bigger move if you break down below the 120.50 or 120 and use a high from tested a little while back, and we'd add that to the breakdown line. Let's see where those two bring me. One would bring me to the 105, which also coincides with the previous bottom formation. Resistance turn support here. We could look back. Let's look back here at the breakout. We'll come back to where we are later. Back in October 2013, late 2013, we had a bottom formation here. Resistance about here, the 105 level. Oh, candle close above the breakout line. Could have established conservative pattern here to play, and we would have had a target added out to the breakout line right here, and this is pretty nice actually, nice and tight. Sell stop here under the wick of that candle. You enter right here at the close of the candle, and that's your risk. That should equal to your risk. So whatever amount you decide to purchase, that should equal to whatever your money management protocols dictate, let's say 1%. And the reward would be the risk. So you have it. Oh, you grabbed it wrong. Okay. The reward would be 1, 2, about 2.5. So the risk 1 to 2.5. I like that. That's enough, especially for this tight formation, which has lasted 2 years consolidation. The longer the range, the stronger the move out. So let's see in time what happens. Another candle. 1 month. Oh, 2 months. And did it reach it? Almost. And there you go, 3 months. So here you go. When that candle, it would mean triggered out, profit stop, and 2-3 year plus consolidation, and 2 months target reach. Move on next, A++. Can't go wrong with that. That's the ultimate setup for me. And when you get those, you you join in the party. Time moved on. We would have been triggered out. And you see a retest closing in on the 105, then decide to go back up. Oh, okay. And then, so right now there's no move for us, no pattern on the monthly. And right here, there could have been a start of a consolidation pattern, sideways move. And indeed, seems to have been a sideways move here. You could have decided this would be a breakout. Shorter term patterns like less, but you're still in your uptrend. And the only thing here that might have prohibited me would have been the risk to reward. A lot of risk because of that huge candle I had to position myself under for not a lot of reward. 98++, and target would have been reached here, right above here. The sell stop, you would have been triggered out. Profit stop. And then, okay, some more consolidation action. Another move here. Unplayable on the monthly candle chart. You would have probably had to dig down to the weekly to be able to play that intermediate pattern. Like I always say, there's more patterns to play on the weekly, and there's even more on the daily. But the offset of having those more patterns available is the probability of reaching those possible targets. There's more noise, more whipsaws. Those charts are more vulnerable, that price action, to whatever, the sky, the sun, a rock falling on the Fed's foot and decides to increase quantitative easing, whatever. On the monthly, those are what I call noise, and these candles, these wicks, that's where the noise was during the month. But the close is more reliable. And we moved on. Here seems to be the support, the resistance, and then we have the support here drying out. And then we have sideways action. There we go, some tests of that support. And that's where we are today. So this seems to be a pretty nice top formation. Here we had our nice multi-year base. Here we have our, since 2015, our multi-year top. And we have our targets. Next step, set my alerts right underneath that breakdown line, the first one. And I'll wait till I get triggered. And when I do get triggered, I'll come back, see, and keep an eye on that. See if it's if we had a monthly close below that line, and then go move on to my risk and money management protocols. See if the trade is worth entering. Just a note: whenever I have like conflicting signals or overlapping signals of patterns on top of patterns, I try to always choose the shortest one, the closest one. Less resistance on the way to my target and more probable chance of reaching that target. You could even see, I'll put an alert here, see that 112 target based off that shorter move gives me, maybe this one is not good. Oh, that's even a bigger target. It gives me a coincide here with some resistance turn support, which could be what I consider some a wall here, or some noise that could, some resistance that we could hit on the way, slowing our advance to our target. And this bigger one, well, you'd have to go all through that one. You'd have to go through maybe some support here and through all this noise here. So I would wait for a more valid formation to be able to play that one, a multiple test of that breakdown line. So I could actually probably remove that target and say that is wrong for now. Nothing wrong with that. I draw lines. I know maybe some people get to draw their lines the first time, the perfect time, the best way. It's an art. I keep moving them around, and eventually you get a feel for what makes sense. That more aggressive target, if I would have used this top, this as the high of the formation with the low, added to breakdown line, It still seems to be okay. This one higher probably of achieving it. This one, well, you have some probable noise here, some resistance, some support turn resistance. You'd have to jot down through there, this range between the 112.50 and the 110. Set my alert here, set my alert here, and that's it for the USD CAD. What I could do now is just show you, or maybe not, we could do that another time. I think I'm going to sign off for now, and thank you for sticking by. Ciao.